Section 1. A shadow falls on the empire. The Hindenburg Report. The year 2024 witnessed a seismic event in the Indian corporate world: the release of the Hindenburg Report on the Adani Group. This report, which would soon become infamous, was not just another piece of financial analysis. It was a detailed exposé that would shake the very foundations of one of India's most powerful conglomerates. This bombshell report, published by the American short-selling firm Hindenburg Research, sent shockwaves through the Indian stock market and cast a long shadow over one of India's largest conglomerates. The Adani Group, a name synonymous with power and influence, found itself at the center of a storm that threatened to unravel its carefully crafted image. On January 24, 2024, Hindenburg Research released a scathing report alleging widespread fraud and stock manipulation within the Adani Group. The timing of the release was no coincidence. It was strategically planned to maximize impact and draw immediate attention from investors, regulators, and the media. The report, the culmination of a 2-year investigation, accused the conglomerate of engaging in a brazen scheme of stock manipulation, accounting fraud, and money laundering. Hindenburg Research claimed to have uncovered a web of deceit that spanned multiple countries and involved numerous shell companies and complex financial transactions. The report's findings had far-reaching consequences, triggering a chain reaction that reverberated across the Indian business landscape and beyond. Stock prices plummeted, investors panicked, and the credibility of the Adani Group was called into question. The ripple effects were felt not just in India, but in global markets as well. The Hindenburg Report's impact extended far beyond the Adani Group. It sparked a broader conversation about the state of corporate governance in India and the effectiveness of regulatory oversight. Questions were raised about how such alleged malpractices could go unnoticed for so long and what measures needed to be put in place to prevent similar incidents in the future. It raised serious questions about corporate governance, regulatory oversight, and the integrity of the Indian stock market. The report highlighted the need for greater transparency and accountability in corporate practices, and it put pressure on regulators to step up their game. The report served as a stark reminder of the vulnerability of even the most powerful corporations to accusations of malfeasance and the potential consequences for investors and the broader economy. It underscored the importance of due diligence and the need for investors to be vigilant and informed. The Hindenburg Report was not just a wake-up call for the Adani Group, but for the entire corporate world, signaling that no entity is immune to scrutiny and accountability. Section 2. The Rise of a Conglomerate. Understanding the Adani Group. To grasp the full significance of the Hindenburg Report's accusations, one must first understand the Adani Group's stature in India. Founded by Gautam Adani in 1988, the Adani Group had grown into a sprawling conglomerate with interests in diverse sectors. These sectors included ports, power generation, renewable energy, mining, and infrastructure. The group's meteoric rise was often attributed to Gautam Adani's close ties to powerful political figures. This rapid expansion and political clout made the Adani Group a significant player in the Indian economy. Its companies were listed on Indian stock exchanges, and its shares were held by numerous domestic and international investors. The group's success story was often touted as a symbol of India's economic growth and potential. However, beneath this veneer of success lurked troubling allegations of crony capitalism and questionable business practices. Section 3. Unmasking the facade key allegations of the Hindenburg Report. The Hindenburg Report has sent shockwaves through the financial world, casting a long shadow over one of India's largest conglomerates. The Hindenburg Report alleged a systematic pattern of financial wrongdoing within the Adani Group. It painted a picture of a company that, behind its polished exterior, was engaged in practices that could undermine investor confidence and market integrity. It claimed that the group had used a complex web of offshore shell companies and related party transactions to inflate its stock prices and defraud investors. These shell companies, often registered in tax havens, were allegedly used to funnel money back into the Adani Group, creating a false sense of financial health and stability. The report provided detailed evidence to support its claims, including financial statements, corporate filings, and interviews with former employees and business associates. These documents painted a troubling picture of financial manipulation and deceit, suggesting that the Adani Group's financial success was built on a foundation of sand. Among the most serious allegations were claims that the Adani Group had manipulated its stock prices through a network of offshore entities controlled by Adani family members. This network, according to the report, was designed to create an illusion of high demand for Adani shares, thereby inflating their market value. These entities, according to the report, would buy Adani Group shares in large quantities, creating artificial demand and driving up the price. This practice, known as pump and dump, is illegal and can have severe consequences for the market and investors. This alleged scheme, the report claimed, enriched the Adani family at the expense of ordinary investors who were left holding overvalued shares when the truth eventually came to light. The fallout from these revelations has been significant, with many investors questioning the integrity of the Adani Group and the broader market implications of such practices. The Hindenburg Report has not only raised serious questions about the Adani Group's business practices, but also highlighted the need for greater transparency and accountability in the corporate world. Section 4. Tremors in the market, immediate fallout for Adani. The Hindenburg Report had an immediate and devastating impact on the Adani Group. The report, which detailed allegations of fraud and stock manipulation, sent shockwaves through the financial world. The group's listed companies saw their share prices plummet in the aftermath of the report's release. Investors, already jittery from global market uncertainties, were quick to react. Investors, spooked by the allegations of fraud and manipulation, rushed to sell their holdings, leading to a massive sell-off that wiped billions of dollars off the group's market value. The panic was palpable, with trading floors buzzing with frantic activity. The group's flagship company, Adani Enterprises, saw its share price plunge by more than 50% in the weeks following the report's publication. This dramatic fall was unprecedented and sent shockwaves through the market. Other group companies, including Adani Ports and Special Economic Zone and Adani Green Energy, also experienced significant declines. The ripple effect was felt across the entire conglomerate, affecting various sectors and stakeholders. The sharp drop in share prices triggered margin calls on loans taken out by the Adani Group, forcing the group to pledge more shares as collateral. This created a vicious cycle, as the need to pledge more shares further eroded investor confidence. This further exacerbated the downward spiral, putting immense pressure on the group's finances and threatening its ability to raise capital for future projects. The financial strain was evident, with the group scrambling to manage its obligations and maintain liquidity. Analysts and financial experts weighed in on the situation, with many expressing concerns about the long-term viability of the Adani Group. The media coverage was relentless, adding to the pressure on the conglomerate. Employees of the Adani Group also felt the impact, with uncertainty looming over job security and future prospects. The headquarters, once a bustling hub of activity, now had an air of tension and unease. Regulatory bodies and government officials began scrutinizing the Adani Group's operations more closely, adding another layer of complexity to the already dire situation. Compliance and legal challenges became a significant concern. The fallout wasn't confined to India alone. International investors and global markets also reacted to the news, with many reassessing their exposure to the Adani Group. The global financial community watched closely as the situation unfolded. The future of several ambitious projects, including those in renewable energy and infrastructure, hung in the balance. The group's ability to secure funding and move forward with these initiatives was now in question. Despite the immediate fallout, The Adani Group began formulating recovery plans. Strategic meetings were held to navigate the crisis and restore confidence among investors and stakeholders. The road ahead was challenging, but the group remained determined to overcome the obstacles. As the dust began to settle, there were signs of a gradual recovery. Some investors, seeing potential value in the beaten-down stocks, started to cautiously re-enter the market. The journey to regain lost ground had begun, but the scars of the immediate fallout would linger for some time.